Hello, friends. My name is Deepak, and I'm a tax code advisor. Our firm specializes in helping people build wealth in the most efficient manner possible. And obviously, saving on taxes is a big part of that. So we work with individuals, high income earners, business owners, all kind of customers. And believe me when I say this, that everybody cares about saving on taxes. And I say this because sometimes I'll meet with clients who would think that tax saving strategies only work for super rich people, people who are having a huge W 2 income or they have multiple businesses, LLCs and stuff like that. And it's true. I mean, those people also want to save on taxes, but we have plenty of customers who are Uber driver, Lyft drivers. They are doing some sort of side gig on their own. They are working in restaurants. They are, working at nail salon. They're working at a waiter at a restaurant, and so forth. And I say this because even if you're not earning 200, 300, $400,000, tax savings are just as relevant for you as they are for somebody who is working as an engineer, doctor, or some other high paying job. One thing I love about this country, the United States, is that you can build wealth in this country no matter how much money you make. There are systems in place, there are strategies in place that works for everyone. Obviously, different strategies work for different people. If you are a doctor, will probably use a different strategy versus if you're a business owner, like running a liquor store or maybe you have a hotel, motel, will use a different strategy. And those of you guys who are doing some sort of, gig like Uber or, being a waiter at a restaurant, will use a different kind of strategy for you. But there are strategies pretty much for all situations. Many times clients come to me because they've been filing taxes on their own or they've been working with somebody else, but those relationships are very transactional in nature, meaning they go there, get their taxes done, they pay a select fees, and that's it. They never talk to them, there's no discussion happening. With our firm, one of the unique thing is we consider overall tax and finance planning as part of our engagement with you. That means we are here to figure out how you can build wealth efficiently, safely. So we're always looking for ways to reduce risk. We're always educating you on things you should not do. And we're always advising you on how to do things the right way, in a compliant way, things that will help you get ahead in life. So that's a little introduction about us. If you are already our clients, thank you very much. If you're not our client, the first step is to set up a consultation. I will personally talk to you. It's all on Zoom, so you don't need to travel or anything like that. You could be anywhere in the country. I'm licensed in all 50 states, so no problem there. I can help you with your taxes, and I can help you deal with your audits. Come up with strategies to help you reduce your taxes. So that's what we do. On the financial side, if you already have a life insurance, perhaps you can get that reviewed by us to see if that life insurance is still adding any value to you, or should you change it into something else. We'll give you an honest review. If you have some sort of fixed income product, you can definitely run that by us. We can tell you if that makes sense or not. If you are planning, for education for yourself or your kids, perhaps for your retirement, or anything else major in your life, such as buying a property, selling a property, selling a business, anything like that, you're welcome to talk to us, and we'll be able to give you our unbiased opinion. So that's what we do here as a tax code advisor. We are here to help you, to guide you, to coach you, and help you improve in whatever segment you are. For example, we are very much connected in business world. So if you're a business owner, we can help you connect with other businesses that can add value to you. If you are a W-2 employee, then we can definitely help you connect with people who might be beneficial to you. Or if you have any side gig or small business, then we can help you connect with people who might be able to utilize your products or services. So don't hesitate to reach out to us. I'll put my number right here. You can just WhatsApp me, and we can connect that way. So today, I'm going to share with you some uh, tax strategies that you should be thinking about right now. Now, I don't want you to go implement them just yet, because oftentimes what happens is you'll hear a strategy and you go like, oh, that's a great strategy, that makes sense, and let's go implement it. And we just don't know your overall picture. I'll give you a simple example. All of you guys probably heard of 401k plans. You probably heard of insurance plans. You probably heard of Roth plans. You probably heard of other plans like DB plans and so forth. HSA plans, 529 plans. They're like, all of these plans are like different buckets. Think of them like a different tool. You can use these tools to accomplish a task, to finish a job, to get something out of them. But if you use the wrong tool to do the wrong job, you're going to get wrong results. At least not the desired result. So that's why I say that it's important that we take a look at the overall picture, because that can help us figure out what is the right thing to do. All right. So having that said, let's talk about some strategies today. I'll start with some of the most commonly seen strategy, and the strategy is always about deferring your income. That means you don't want to pay taxes right now. You would like to pay taxes later on. And when I say later on, that means we deal with that problem not today, someday in future. It still works because it saves me dollars today. So one of the least used tax strategy is the deferred compensation plans. If you don't know what they are, I have a detailed webinar on that posted on the YouTube channel. You can go watch that. It talks about what are the advantages and disadvantages of deferred compensation plans. But if you are a high W-2 earner and you work for one of the stable companies that offer that benefit, then you can think about that. So this is usually available to executives or highly paid individuals. So those people can defer a portion of their income into this DC plan, deferred compensation plan. But remember, there is a risk. So for example, if company goes out of business or company gets sued or some other liability arises, that compensation can be at risk. So that's one thing you can look into it, but there's a definitely a place in the planning for you guys. That's one. Number two is obviously 401k contribution. I think this is the one that most people are familiar with. So you can maximize contribution to traditional 401k plan to reduce your taxable income. For younger individuals, you can consider Roth, or you might consider doing both of them. Sometimes people will say, well, I don't qualify for Roth. In that case, you can consider doing backdoor Roth. But like I said, uh, even the 401k contributions can get quite tricky. Does it make sense to do 401k contribution, or are there other ways to accomplish a better result? Uh, One of the problems I run into 401k plans is I will meet with a client, and the client will say, yeah, I'm putting in 20,000 into my 401k or $15,000 into 401k. And when I ask them about their risk tolerance, they say, oh, we don't have, we cannot afford to lose a dollar. If you don't have a risk tolerance and you're putting money into a 401k plan, that is a problem, because you're going to keep getting panic every time market goes down, and you're going to move those funds into money market and then put them back when when the market goes back up. Those can be quite risky. So until you get a grasp of how the markets work and how to stay calm when there is blood in the water, then 401k contributions will make sense. And the reason behind that is because most 401k contributions have very specific plan, like very specific fund options. It's not like you can do anything you want to do. So your choices are limited. Some of you guys might have 401k plans from previous employers. So there are different strategies for those. How do you deal with them? So anyhow, I don't want to make too much talk about 401ks, but there are a lot of things to look around 401k to get the most out of them. I wanted to bring that out because I don't think anyone have a discussion with their tax professional, with their financial advisors about 401k plans. And another reason behind that too is, first of all, tax professionals don't really make any money out of your 401k, right? So they don't really have any uh, reason to talk to you about that. So that's why they don't talk. And the financial advisors get paid when you move funds into their fund. And your 401k is probably controlled by your employer. So your financial advisor also don't have an interest in that either. So they don't have an interest. And then you as an individual kind of treat them on autopilot. But you shouldn't, because what are your goals? Are you going to stay in the United States, perhaps move into a different country? What are you planning to do on retirement? How much savings do you have outside of 401k? What kind of tax bracket you are in? There's a lot goes into the picture. So if we can sit down for an hour and take a look at the overall picture, then I think you will get a little bit more refined answer as to how to deal with your 401k contributions. Third one that I often see missing is the health savings account. People have it, but they don't fully fund it. So if you're eligible, then contribute to HSA to reduce your taxable income and allow the balance to grow tax deferred. Why you want to do that? Because obviously in future you can access that money for medical reasons, and there is other ways to get the money out of HSA as well. But the main idea is, if you take a look at inflation, I'm talking about United States. Where is the biggest inflation? What is really hurting us the most? Medical bills are hurting us the most. Housing cost really creating a problem for us, and education. Those three are the big fields. So when customers come to me, I like to point out into these three different areas and see, are you guys well covered? Because if you have not planned for these three things in advance, chances are you're going to pay significantly more than somebody who has planned for it. I mean, you'll be surprised how much planning can make a difference in these things. Another one is flexible spending account, although I personally like HSA accounts, but utilize an FSA account for medical or dependent care expenses to reduce your taxable income. But remember, in FSA accounts, unused funds may not carry over. So be careful with that. That's why I'm not a big fan of FSA accounts versus HSA account. You can keep it all the way up to your retirement. So I like those. Another one that is commonly missing from people's timeline is spousal IRA, because sometimes, maybe let's just say husband is driving an Uber and maybe wife is staying at home. Well, as long as one spouse has a earned income, you can still have an IRA account for the other spouse. So don't ignore that. That's another important strategy to concern. Okay, before you start making these contributions, you need to understand what is pre-tax and what is post-tax. So many times I would see that people will say, well, post-tax is better because you can take the money out during your retirements tax-free. That is actually kind of like a rule of thumb, meaning that's not always true. Sometimes it's true, but not always true. So once again, maybe pre-tax is better, maybe Roth is better, maybe both are good. So we need to take a look at the situation and figure that out. Now, most people like to be um, somewhat charitable. So if you're giving some sort of charity to your church or doing something, always collect the receipt from them. So that's very important. You can use that as part of your deductions. And then if you don't do it that way, then you can also consider donor advice funds. So there are online funds that you can put the money in, and then those funds will distribute money to charities. The only problem is they will only go to the funds, charities that are part of those funds. So that's another one that I commonly see that people are not utilizing as well. Now, those of you guys who have higher income, and when I say higher income, 500K or more, that's what I'm referring to. You have uh, problems with the capital gains, like maybe there's a big property sale, or maybe you have some crypto, those kind of things, then we can use something called CRUT. It's basically a trust that is specially designed to provide you income from that trust, and then little bit of that money is left over to a charity. So that can also help you eliminate most of your capital gain and provide you income over lifetime. So that's another strategy sometimes we use. So if you are and I guess just I say high income because if you already have a high income, then you get capital gains on top of that. That can be very painful. And I'm recording this video in August 2024, and this year is an election year, and there's a lot of conversation about increasing the tax on capital gains as well. So depending upon how the election goes, and if Congress decides to make a change, that could be even higher. But my point is, the charitable remainder trust, CRUTs or unit trust, they also work for lower income as well. The idea is for people who have a big capital gain problem. This capital gain problem can happen, for example, from crypto. It can happen from real estate. It can even happen from sale of business. So keep that in mind. Many times I see people selling IT companies, gas stations for big dollars. So I like to talk about those when we are talking about at least $1 million or more in gain. So if you have that, then give me a call and we can discuss those a little bit more in detail. Now, we are in the month of August, and now next month is September, then comes the October. So one thing that happens, most people might not realize, is that a lot of mutual funds, they have October as their closing month, not December like most of us. So in October, a lot of these mutual fund companies go do what we call capital loss harvesting. That means they sell investment at a loss in brokerage account to offset capital gains. So typically Octobers are quite volatile months. So just keep that in mind. And I say that because that you can, if you see that volatility and you want to do some sort of Roth conversion, then you can time that. Maybe when markets are a little bit down, you may consider doing a Roth conversion. And the second thing I want to bring out is that maybe you want to do capital loss harvesting yourself, you know, but again, problem with that is you really need to understand businesses, you need to understand the stocks you own, you need to understand the markets. And if you don't understand all that, this buying and selling game of stock market can be quite risky. So I don't advise that to anyone unless you understand that game yourself. But if you know there are companies that are just doing really bad and you have some losses and you have some gains, maybe you want to offset, that strategy can work for you. Another one you can also think about is something called direct indexing. So you might not have heard of this, but you may want to consider it. Many companies are now offering that. So you can call out wherever you buy your stocks at and ask them if they have direct indexing. Most companies that I know of, they don't do it for any dollar amount. They will probably have some sort of minimum. They might say, hey, minimum 100,000, 200, 300, whatever. And instead of buying, let's just say, an ETF, they will buy the same stocks that are available in ETF, and they will try to use the strategy for harvesting losses. Because even in an ETF, there are some winners and there are some um, losers. But ETF doesn't just adjust based on direct indexing. They are just based on market caps. More, uh, I guess there are a lot of different type of ETFs, so I shouldn't say that. But I'm talking about, for example, you know, S&P 500. They don't really care whether market is up, market is down, interest rates are up, down, who's going to become the president. They don't really care about all about that, right? They only care about the market cap. As the market cap increases, the stock is added to S&P 500. If the market cap goes down, then the stock is kicked out of S&P 500. The idea is they let the winners run and the losers just kind of fall off, which is a good strategy. It works, but it's not really as beneficial for tax purposes. So you can consider direct indexing. So what you want to do is you want to reach out to wherever your account it, maybe Fidelity, Vanguard, or whatever company you're using, and ask them what options do they offer for direct indexing. So that can help you out a little bit as well. Okay. Then we have state and local taxes, commonly known as SALT. And now they're capped at $10,000. Timing the payment of state and local taxes can still be strategic way to maximize deductions. So we might want to take a look at that if it makes sense or not. That is something I would recommend work with your tax professional. I think they will be better to guide you. Set up a consultation appointment and say, hey, I want you to talk about that. Because if you don't, most likely they're not going to bring it up. Now, if we do a consultation with us, we're going to bring it up, but I know most tax professionals don't even talk about it. I think mortgage interest and property taxes are very common. Most people understand that. So I'm not going to go deeper into that. Another tax strategy that works very well is start a side hustle and let's convert them into a business. So I started out the conversation talking to people who perhaps don't really see themselves as the major business owners. For example, if somebody is driving an Uber, or somebody um, is doing some sort of other gig, maybe providing consulting, maybe training, coaching, helping, you know, moving stuff. There could be all kinds of things that is happening out there. I would like to talk to you and help you properly structure that business, because once we properly structure that business, it opens up doors to a lot of different tax strategies that we can apply. So that's one reason. Number two, I want to also help you protect against liabilities. So, if needed, we will include a law firm into it so they can provide proper agreements and draft things properly. But at the bare minimum, you should understand what kind of risk there is. I would also like, if especially if you are into business, I would like to review all your insurance policies. And then, obviously, if you don't have them, then you can work with somebody from our team who can help you make sure you get all of those. And once you have a business, we may even consider doing some sort of benefit program for you that can help you and your wife and your kids. We can also consider some sort of income deferral programs to reduce your taxable income. Once again, all depends upon what kind of income you have. So there are like many different possibilities there. Another thing that comes to my mind, especially this year, is there are a lot of risky tax schemes going on, and I see them because I'm in tax business, so I see a lot of ads on Instagram, on Facebook, YouTube, where people will pretend like they have these awesome tax strategies, something that other people don't know. First of all, I do agree that not everybody is equally educated. Um, and I don't really mean by like, they didn't go to school or they don't have a license. What I mean to say is people don't spend as much time learning on daily basis. And if they don't learn, they don't go to seminars, they don't talk to various kind of financial professionals, attorneys, and just talk to people in financial world, they would not learn what kind of strategies are out there. I can give you a few examples. Let's say insurance. Or the tax professional never ask what kind of insurance you have, let me review it, give you my opinion, does it make sense or not, right? Because they don't know about it. You become my client, I will review all your policies, and I'll tell you if you're wasting your money or if there is some value in it. Why? Because that is such a big part of your life. Like, you're putting all these money into these policies, you should be able to take advantage of them during your retirement years. And if you're just wasting your money, that can be a big problem, right? So that's one example. Another example is people offering all kind of weird tax strategies, and they pretend to be big shots, because they think they know better. The problem is they're not big shots. It's not that they know better, it's just that those strategies are risky. So if somebody offers you those, ask them to give you in writing that these strategies are safe. and they are recommending it. Why? Because if something goes wrong, you get audited, you get in trouble. If you have that letter, you will still be in trouble, but that tax firm will also be equally in trouble. So at least it gives you a reason to argue with IRS that you didn't wake up and just decide to do it. Somebody encouraged you to do it. Now, my personal suggestion to you: just don't bother with it, don't do it at all. But people do stuff, so be cautious with that. Now, does that mean you can't be creative with tax planning? No. Of course, you should be creative. You should take advantage of every possible legit strategy out there. So, we are able to definitely guide you through that. Another one that comes to my mind is movies and oil and gas, but because not that many people use it, so I think I'll be just wasting your time. But if you are one of those who have that, or you think that might be beneficial to you, so you can ask me those during the consultation call. So these are some of the ones that comes to my mind today. But overall, I mean, there are tons more, but they all depend on each unique situation. And I don't want to make this a 3 hour video because, let's say if I meet with 100 clients, those kind of like maybe one strategy might work for two of them. Another one might work for another two. So it's not like what I covered today is these are generic strategies that work for most people. But this is not it. There are many more things. So um, reach out to me if I can be of any help to you. You can always WhatsApp me. My introduction call for 15 minutes is absolutely free. You can talk about your insurance, you can talk about your business, you can talk about your individual situation, you can talk about education planning, retirement planning, whatever you like, your choice. First 15 minutes is free. And after that, it's a consultation call. I have no other job. I don't sell you any product. This is how I make money. So please understand that and respect that. But my goal is to really help you grow. So I think you will find a lot of value in it. There are two ways you can do consultation with me. One is hourly, and another is what I call comprehensive consultation. For 2024, the pricing is $1,500. That usually lasts between 6 to 10 hours. Don't worry, we don't do it in one day. It's divided into maybe 3 or 4 or 5 days, and we go over everything. And, we talk about your real estate, we talk about education planning, retirement planning, if you're buying, selling, your business, your insurances, your W-2 income, everything. And we try to make you more optimized, so that way you are getting the most out of what you value the most, right? It's all the income sources, and we want you to keep most of it to yourself, so that way you waste as little as possible and grow your wealth safely, and most importantly, stay in compliance. That's the biggest issue I see. So anyhow, I hope you find this information helpful. If you have any questions, then you can leave it at a comment. You can always reach out to me via WhatsApp. I can, if it's a generic question, I'll be happy to answer that and put it on a YouTube channel. And if it's something specific situation, then set up a meeting with me, and let's dig deeper and try to figure it out together. All right. Thank you so much for spending your time with me, and I'll look forward to talking to you soon.